Hey everyone, welcome back to our channel. Today, we're going to talk about something that can make a huge difference in your financial life, your credit score. A good credit score can help you get better rates on loans, credit cards, and even insurance premiums. But what is a credit score, and how can you improve it? In this video, we'll discuss the importance of credit scores, how they are calculated, and how you can use Kaizen principles to improve your credit score in 2023. What is a credit score? First things first, let's talk about what a credit score is. Your credit score is a numerical representation of your credit worthiness based on your past credit behavior. It ranges from 300 to 850, with higher scores indicating better credit worthiness. Lenders and financial institutions use your credit score to determine whether to lend you money or extend credit and at what interest rate. In brief, credit score could also mean the prediction of your financial behavior. It represents your worthiness as an earning individual by reflecting it as your credit personality. Banks or companies often take your credit score into account before offering you the best of their services. For example, before lending out money or to offer you a mortgage, credit card, and other credit products like an auto loan, they first need to make sure that you are the right person for it. Your credit score is an all-in-one place to reflect your savings, expenditure, or spending frequency. Did we yet mention that credit scores can also make a difference in the rate of interest or time period of a loan? Well, it sure does. The companies calculate your worthiness based on lower or higher credit scores. If you have a higher credit score, it instantly gives your personality a boost. It directly means that you are eligible enough to pay back the mortgage or loan, so you might get it in no time. On the other hand, if you are stuck with a low credit score, then you might want to increase it to avail future benefits. How is your credit score calculated? Your credit score is calculated based on several factors, including your payment history, credit utilization, length of credit history, types of credit used, and new credit inquiries. Isn't it obvious to dig a little deeper into your financial personality before giving you offers on insurance, credit limit, and ROI benefits? While screening your credit report, payment history is the most critical factor, accounting for 35% of your score. This includes on-time payments, late payments, and any accounts in collections or charged off. Credit utilization accounts for 30% of your score and is the ratio of the credit you're using compared to your total available credit. Length of credit history accounts for 15% of your score, while types of credit used and new credit inquiries each account for 10%. This mathematical input used by the companies is called a scoring model, which is used to create a unique credit score with respect to your credit report. There are a lot of factors determining your credit score. For example, your bill payment history, your unpaid debt, number of loans associated with your account, and finally, for how long you have had your loan account open. An individual does not have only one credit score. It just depends on different scoring models based on wearing credit reports on your numerous accounts. So are you ready to improve your scores to improvise your financial profile? Why is your credit score important? Your credit score is important because it can impact your financial options in many ways. A good credit score can help you qualify for lower interest rates on loans, credit cards, and mortgages. It can also help you get approved for rental applications or utility services. On the other hand, a poor credit score can limit your options and cost you more money in the long run. It can give your credit limit a boost and can even help you get a lower rate of interest on certain loans. It basically defines your personality to enable your payouts. So it is extremely important to work on your credit score as much as you work on yourself to make your exterior look better. How to improve your credit score using Kaizen principles. Your dream life may seem intimidating at first and feel like it is out of reach, but in reality, it may not be that far to achieve. If you follow these simple Japanese philosophy techniques called the Kaizen, it is a rapid self-improvement mantra that has a step-by-step developmental pattern. These small incremental steps will soon provide significant results over time. Hence, by using these simple Kaizen techniques of self-improvement, you can move one step several steps closer to achieve your dream. So how can you improve your credit score? Here are a few ways to get started. 1. Check your credit report regularly. You should be aware of what your credit reports are going to reflect. In our busy lives, we often forget to pay attention to these little things. Hence, first of all, you need to be aware of what your report suggests. This tip is useful because oftentimes when people opt out for loans, their poor credit scores come as a shocker to them. Ultimately, their whole plans associated with the loans, ROI, and time period get shaken. Hence, pay close attention to your reports. You start by checking your credit report for errors and discrepancies. You can get a free copy of your credit report once a year from each of the 3 major credit bureaus. Look for errors in your personal information, payment history, and credit limits. Dispute any errors you find and follow up to make sure they're corrected. This method is proven as far as improving one's personal credit score is concerned. So get to the nearest authorities and check your existing credit report immediately. 2. Pay your bills on time. Pay your bills on time. Payment history is one of the most critical factors in determining your credit score. Make sure you pay all of your bills on time, including credit cards, loans, and utility bills. Set up automatic payments or reminders if you need to. As we said, your credit reports reflect everything about you, starting from already existing loans to even time you are required to pay those debts back. When you pay your bills on time, it instantly gives an impression of you being trustworthy enough to even pay your future bills on time. In fact, it is one of the most important things companies look out for before lending out a sum. Who knew procrastination and paying your bills a little late could result in something as significant as lowering your credit scores, right? So set that alarm or mark it in the calendar and try to pay every bill or installment on time. 3. Keep your credit utilization low. Your credit utilization ratio is the amount of credit you're using compared to your total available credit. Aim to keep your credit utilization below 30%. If you're using more than that, try to pay down your balances or request a credit limit increase. When most of the people ask what is the benefit of getting a credit card with a higher spending limit, then this might be the simplest explanation to them. People often sought out higher credit limits just to maintain their credit scores. If you fully exhaust your credit limit on a regular basis, then it negatively impacts on your financial choices and decisions. So for now, if you are struggling to maintain your credit utilization below 30%, then you can always request a card with a higher limit from the bank. Whatever it takes to make your credit score look decent. It is not only beneficial to maintaining your credit reports, but managing your expenditures too. In this way, you will be a little more cautious before carelessly using your credit card for everything. Isn't it? 4. Avoid opening too many new accounts. It is not an unknown fact that a lot of us have tried to jump from one company to another to avail more credit benefits. But did you know that this small move can make a huge negative impact on your credit reports? Yes, you heard it right. Opening too many new credit accounts in a short period can signal to lenders that you're a risky borrower. Be selective about the accounts you open and don't apply for new credit unless you really need it. Even if you already have a lot of accounts on your stack, then do not forget to permanently close the ones you are not using. According to reports, a person possessing at least more than 2 or 3 credit accounts can be labeled as a careless spender. Hence, if you have just started earning or are about to, then always remember to open a few accounts as possible. 5. Be patient. Last but not the least, always be patient in this process. Your credit score cannot be improved overnight. Rather, expecting it to change overnight is exactly the exact opposite of what it conveys. Your credit report is a proof of your consistency and patience over a long time. Hence, if you have just started out or are trying to improve your credit score, then do not expect it to alter overnight. Rather, continue doing what you need to do without worrying about the results. Remember that improving your credit score takes time. Focus on making consistent incremental improvements over time, rather than trying to make big changes all at once. To be precise, just like your small mistakes can usually impact your reports. Similarly, your small steps towards improving your score can also result in big changes. You can have your dream credit score even before you realize if you do not expect for instant results. Improving your credit score is an essential part of your overall financial health. By using Kaizen principles, you can make small but meaningful improvements over time. Start by checking your credit report regularly, paying your bills on time, keeping your credit utilization low, avoiding opening too many new accounts, and being patient. By taking these steps, you can improve your credit score and open up more financial options for yourself in the future. Thanks for watching, and don't forget to subscribe to our channel for more financial tips and advice. If you liked the video, do give it a huge thumbs up and hit the tiny bell icon right beside the subscribe button to always find us in your home feed.